Hello traders, Mike Hamilton from Trade the Easy Way, and I recommend a couple of trades in the room today. One was short the euro, which worked because we got the gap up, so I'm just looking for this to fill the gap. The gap gets filled at 113, but the Friday close is right down there at around about 250, 280 mark. So I wouldn't be at all surprised if we come right the way down. Well, I say right the way down, it's not that far, is it? Down to this 20 EMA, make contact with 20 EMA, and then assuming, and that's a big assuming with a capital A, assuming that everything goes well this week, i.e. Britain stay in, I think this could push its way up. Otherwise, this may continue to go down. So we're in apex. Whenever a chart gets stuck in an apex like that, it's much harder to call swing trades. All you can do at this stage, I think personally, is do day trades, and that's what I recommend as a day trade. And now we're not engulfing yesterday's price action, because this little buy is just Sunday open. All we're doing is making contact with the pivot levels from last week, and at which point we may build and continue to the upside and retest this 115. If you look at the monthly chart overall, I think once we start, we could well run into 120 at some stage in the coming months. That's possible, at which stage I think the dollar will start to get strong and this could roll over. So in the months to come, following a retest of that area there, if we get as high as that, I think this could roll over and really come right the way back to parity, and possibly even underneath parity. I mean, the life of the euro started all the way down here around about this 82 mark, and I think once we got this out of the way and we see some better data coming in from the US, I think the Fed will start to raise rates, and then that will start to put a lot of downward pressure on that euro. But anyway, short term, I'm looking for this euro to reconnect with about 270, 280, and then possibly push back up. I'm having to be that cautious because this is a very volatile week with the vote. So we have a nice, an amazing push higher up here. Very difficult to trade. I mean, for example, at one stage we had a 5-minute drop that went from 680 to 580. Yeah, we had a 5-minute 100-point drop. So that's the kind of volatility that we've got. The brokers have really racked up the margin on that needed to trade these, and understandably, so be very careful. The gap fill on this one is all the way down at 143.80. So similar story. I'm looking for this to potentially come back to the top of this channel, and then potentially roll over. Might power through. We might see a test of 150 at some stage. It's not that. It's only 320 pips off. It's not that far off. But which after that we may see that push back down. So I'll talk about that as time goes on. So I'm just really erring on the side of caution here. The trade that didn't work for me was this one. Euro New Zealand. It's a counter trend trade, and so I just got stopped out and left it. The main support level is down here at 158, so let's just see what happens. We could be bottoming here, but hey, I've had my chance. I'm going to leave it alone now. That's a very weak daily bar we're looking at here, so I'll stand aside. But this 159 could at some stage get bought, but the moving averages are all fanning out. It's very bearish. So my reversal idea did not work, but at least the main trade did on the Euro US. So that leaves us with what else have we got? Nothing much else of any interest to me here. Still keeping an eye out this one. I think this one's got some more to pop. This is New Zealand US. I think this will. I'd love to see that test 72.30, 72.50. We had a reversal. We had a sell signal here last week on the 10th, It's possible that we're going to come up here and fail, but I'm looking, yeah, just expecting a bit more strength in this one before this one gives up, because I think the life of New Zealand at these highs may not be long. Okay, let's look at the Dow and then I'll sign off. Yeah, typical of this volatility, the Dow had a really nice push up for half an hour. It moved up from 860 to 950 and then continue, and then now we're seeing highs being sold into. So very, very choppy. We have a reversal bar up there. It was 70,900. We'll see how that goes. You can see on the weekly we have this major resistance level. The MACD is potentially crossing here. We had divergence up at these highs. So you know, the bears are very happy to let this run up, and then they will offer that out. Alright, so extreme caution needed. Trade very lightly. I think there's not a lot of data this week anyway, so we're data thin, with the exception of the, well, it's not a piece of data, is it? It's a political event. Alright, so that's all I've got for you. I think what I will do is just keep a close eye on the euro. Not looking to take any swing trades. Now my Euro New Zealand idea didn't work at this stage. Keep an eye on that. Going to keep an eye on all these main pairs. One thing to note that the UK stocks have had a good day today. Excuse me. I was trying to suggest to people that they might want to get into Standard Chartered. That's now got a gap. I think that could get filled, at which point I think this is actually a nice looking chart. There we go. I haven't fibbed the weekly and I should have done, so let's just see what that's going to show to us. Right, that shows, so under here in February this year we dipped underneath this main support. We're closing back above it. 530 is a key level, which will give us a gap fill. So if you're not in this one, keep an eye on it. I've been talking about being very cautious. The last thing I want you to do is to jump into a lot of shares at this stage, but just note that at the moment the market's pricing in a stay-in vote, a Brexit, and some of these stocks are doing well. If you look at a couple of other UK stocks while I'm here, Lloyds Bank, so we had that dropping down to 61, we're up to 70 now. Rolls-Royce is happy, just coming to a lot of resistance now, so my advice to you is stay out of these, but just maybe just as far as stocks are concerned, don't initiate any moves, any new entries this week, and then see where we are once we come out of this. Talked about this one a few times in the past. This dropped down to 842, got a high of 900 and a gap down there at 870. So I would suggest you might look out for a gap fill. Alright, and anything else? Because Thomas Cook have been beaten up. We've got a gap at 87. So watch out for this one. You're just coming back into contact with the 20 EMA. Keep an eye on this one, because stocks like that obviously are going to get very affected. Alright, I'll leave it there. Let's keep an eye on this one. 3i, III. Topped out at 570, dropped out down to 5, and now we have pushing to 550 with a gap at 522. This one is a nice clean stock, so I would envisage that gap would get filled sometime soon. Maybe as we get into July. But overall, I am bearish these indices. I think these indices may get a little push higher if the markets like the results on Thursday. At which point I would look for that to for the bears to get back, sink their teeth into any highs and potentially sell that. All right, sorry, I flicked around a lot. I mean, didn't intend to do that, but so overall, looking for that Euro US to come in and land on that 270. Some stocks that are worth looking out for as the week unfolds. Just be very wary of the indices and be very wary of any of these pairs related to the vote on Thursday, like any euro pairs, any pound pairs. Just be very, very careful. Let's look at the euro pound before we go. So this is the market pricing in a Brexit, a stay-in vote, coming right into this 200 EMA. Alright, I'll try and give you some greater clarity as the week unfolds, but take it easy. Bye for now.